ASML is a favorite investment, and ASML is also a company with a strong sustainable advantage. But the question is ASML a good investment today for the coming years? First of all, ASML is a long-term position, and I have personally held a long-term position in it, and I will show it to you below. The first time I purchased ASML was in 2018. A few times since then, I sold it once. I bought additional shares several times and then sold positions in ASML, particularly in 2021. When we look at the chart, it seems like almost perfect market timing for buying and selling. But be aware, I am not a market timer. I simply invest long-term in companies that I believe are quality companies that I buy at a good valuation. The problem with ASML is often that it is overvalued in my opinion, and that is why I sold it. We see sales here in August 2021, in October 2021, and then in November 2021. We see here on the screen that in August 2021, I sold a portion, which is almost at a peak compared to the decline towards 2023. And we also see here that in November I sold almost at the peak, but that was just luck, not market timing. But here the valuation of ASML was very high. Then I bought ASML once again in 2022. October, so that is about here. So you see, I bought back in significantly lower than the moment I sold. And then I held on for a long time, but I sold a larger portion and actually my entire position in ASML in June 2023, part of it. That was just taking profits. And then I sold my entire position in April 2024 and in June 2024. And when we look at the training view, we see April 2024 and June 2024. That was again almost at the peak. So I am not a trader at all, but the market timing is almost perfect with ASML. How is that possible? Luck. But mainly just looking at financial valuation. If the financial valuation is very high, even for a great company like ASML, then the upside potential is simply lower than the downside potential. And you simply sell when valuations rise too high, and that is not as difficult as people want to make it seem. You just need to look closely at the financial valuation. And simple ratios are also there to help you, such as the price to earnings ratio and price to cash flow ratio. And if they are all very high, then you need to carefully consider what the risk is that the stock will decline in the short term. I also want to add that ASML is a great stock for the long term, at least that's what I think, but even ASML's unique position in the semiconductor industry with their high quality machines is susceptible to disruptive innovation. And I am not an expert in that, and you probably aren't either, which is fine, but if you are not, then you need to be very careful about the price at which you buy your ASML. Now, for a whole day, we see another decline in the ASML stock, and the current price to earnings ratio is around 35. The question is that still a good price? Well, I can tell you that I only feel motivated to buy ASML again when the price to earnings ratio is lower than at least 35. Actually, it should become interesting again below 25, but of course there are several ratios that are important to determine. And don't forget, ASML is a cyclical stock, so you can use cyclical movements to your advantage. What is happening now is that the valuation is high, and suddenly it may face challenges for a few quarters. And the market, Mr. Market, reacts sharply. This is often the reaction with overvalued stocks. When future expectations are not realized, at least in the short term, the market reaction is severe, leading to significant volatility that you, as a long-term investor, can benefit from. However, I would not enter the market just yet, and I will show you why. First of all, the fair value estimate from Morningstar. As you are used to, we always show that, and they estimate ASML at a price of 900 euros, and that is significantly higher than the current price. So even after this price drop, the number seems to have become more interesting. They also indicate that the economic mode is wide. In other words, a strong competitive advantage. I agree with all of that, and the price target from the analysts is also significantly higher than the current price, but still, I tell you that the price to earnings ratio is still relatively high. How do we see that? For example, when we open fast graphs, it's just a bit simpler because we are now using data, numbers, and statistics, which saves you some thinking. Only when you want to make an investment will you create the scenarios you need to make, and you will want to calculate the intrinsic value yourself. If the PI ratio is above 30, it must be a great stock. The PI is around 34. Recently, the PI was 50. I sold my position, and now the PI is dropping. Let's take a look at the forecasting calculator. It takes into account that the industrial value from Morningstar of €900 is calculated based on an infinite lifespan of ASML, indicating significant long-term growth. And what we see here in fast graphs looks at up to 2026, and that is therefore more short-term. But for the sake of convenience, let's assume that the current PI ratio of 34 remains the same in 2 years. If ASML can achieve a growth of what is expected below, 23% and another 23% in profit growth or earnings per share growth, then ASML could achieve a return of about 20% from this level. So that sounds quite plausible high. However, a PE ratio of 34 is particularly high. So let's say, and we are a bit more cautious, and we assume 25, then the potential return is only 5%. However, there is also a scenario where things could go quite poorly, and the PI ratio, for example, is temporarily 20%. In that case, you would see a downward potential for ASML. Of course, if you look at long-term growth, you will see a different situation. The long-term estimate of EPS growth until 2029 is 16%. Now, I can't adjust it myself, so that's why I say you need to manually make a calculation if you want to calculate the intrinsic value. But this is purely for illustration. If this is true, that 16% EPS growth over a much longer term, then one must take into account that ASML is becoming larger and larger. Most of the time, as you grow larger, it becomes more difficult to achieve consistent profit growth. So profit growth should quickly reduce to a normal level, even an industry normal level. Although ASML is certainly a top company, if this is the case with long-term growth, then the total annual return is about 5 to 6% relative to the PI ratio, as shown here. So depending on which perspective and scenario you look at it from, ASML may be interesting, but I think ASML could become much more interesting if the stock simply declines further in the short term. And you must always keep in mind that you can only invest your money once at this moment. So is ASML the best option? I think it's a great company. As you can see, I have invested in it myself for several months. But I believe that there are simply better options than ASML at this moment, purely based on the valuation. The valuation is simply on the high side. We also see that the PI ratio at the moment is 36. For next year, it is estimated to be 35, but this is of course a less favorable year, as ASML has also announced. More importantly, however, is that the failure ratio, which is calculated over 5 years, is still 1.7. Well, for a good stock, an acceptable ratio might be 1.5, but we prefer stocks with a failure ratio below 1, ideally well below 1, which means the downside potential is actually relatively lower. You also see that the price to cash flow for next year is estimated at 35. The sector median is significantly lower, but you should also compare ASML with companies like Nvidia, Apple, or Netflix. I'm just mentioning a few companies. And then you always have to ask whether ASML is a better choice compared to those other superior companies. And then what's even more interesting is, okay, but maybe those superior companies are all very highly valued. And maybe there are some really interesting value, dividend, or growth stocks that you can buy for a much better risk profile with higher upside potential in terms of returns. For example, at this moment, my stock app. Loving has a return of about 230% in 1 year. Those are nice examples. You see, not all are equally successful, but it is, of course, about a few outliers with potentially high returns. And Aploving is currently growing much faster than ASML. However, Aploving also has a high price tag at the moment, so it is certainly not without risk. Looking back at ASML revenue growth, look, for the 5-year average, these are of course just excellent figures. But you see, if the valuation is high and things are not going well, and don't forget ASML is in the cyclical industry, then the stock price can simply decline more in the short term. We see that the EPS growth is estimated to be 20% next year. Well, that aligns with what we just saw in fast grabs. And the EPS growth for the longer term, 3 to 5 years, is estimated at 20%. Those are indeed really striking figures. However, keep in mind that the EPS growth has already been factored into the bad luck ratio. The bad luck ratio is 1.77 at the moment, and that is all according to the estimates. And that is not super interesting. It would be more interesting to patiently wait until ASML drops further. There is no rush. If you are just lucky, you can buy ASML at a very good price. And if you're not lucky, well, at least you haven't lost any money, because you can only lose money if you put money at stake. And of course, you can only realize returns if you put money at stake. But you have to ask yourself whether ASML is the best choice, even if it's just in comparison to an ETF, for example. Well, of course, the profitability is interesting. You can also see that ASML scores superiorly in terms of profitability, net income of 26% in line with the 5-year average. By the way, not yet mentioned, but the CEO and another high-ranking official of ASML both have left, and that is really not favorable for this company. However, they also indicated in their podcast that we have positioned the company in such a way that success can be continued. That is also what Warren Buffett and Charlie Munger indicate, as they prefer to invest in a company with such a superior earning model that even a monkey could manage it. That is, of course, what you want. The return on equity is currently very high. The 5-year average is also higher, which again shows how superior ASML is even within the semiconductor industry. Return on total capital above 20%, so ASML is rightly a popular favorite stock. But in the very short term, Schenck indicates that it is a hold. And if you look at the technical analysis, you don't need to be an expert, but you can see that there is a downward trend occurring. 2 sell indicators based on our long-term trends, and we also see in the short-term trends that the MACD is starting to turn negative and below 0. And the stochastics is not particularly encouraging. But more important in this case, I think, is the MACD line in combination with the long-term price trend. A further decline could indeed be potentially realistic at this moment. It would be very nice if the price drops in the short term to around 550, 560, but that is purely viewed from a potential support level, from technical analysis. Much more important is, of course, what is your intrinsic value? What is your fair value estimate? Morningstar's is 900 euros. That might be a bit on the high side, but of course, this is about thinking long term. And if you think long term, it's simpler, because then you can buy a very strong company like ASML at a, yes, maybe even a somewhat higher price than what you would want to pay in the short term. Only if you simply wait for a very long term can you still achieve an attractive return. In summary, I would not buy ASML at this moment, because I believe there are better opportunities and better companies than ASML, and I would simply wait. If the price to earnings ratio, for whatever reason, falls below 20 in the short term, then I think ASML would be very interesting. And if not, we just continue with life. The sun is shining, the weather is nice, but we also worry about it.